Here at home, President Arroyo's economic advisor believes the Philippines should also have a response to the global financial crisis. Albay Governor Joey Salceda is proposing a 50 billion peso financial defense package, which aims to increase the maximum insurance coverage on deposits of Philippine Deposit Insurance Corporation from 250,000 pesos per depositor to 500,000 pesos, as well as other measures. Joining us this evening is Governor Joey Salceda.
Yeah, good evening.
Good evening. Thanks for joining us this evening. So let's start off first on the increase in the deposit insurance. You're looking to increase it from 250,000 to 500,000 pesos. Yeah. That increase, what percentage now of total deposits would be covered by that?
Kasi yung 250, 95% yun ng depositors. Pero for 13.7% lang ng total value. Yeah. Yung total value ng deposits nasa 3.6 trillion. So mga 450 billion. So nakatiwangwang pa rin yung 3.1 trillion. That's enough, I think, for moral hazard. Kasi ayaw mo lang naman na katulad ng ginawa ng Ireland, Sweden, Greece, 100% cover sila ng private.
But this is just enough to basically parang to assure lang this.
Preemptive.
Okay.
Kasi ang ano naman dyan, habang wala yung bagyo, ayusin mo na yung bahay.
Okay, so, but for the insurance coverage, this will be the banks basically paying up on the insurance.
Yeah, usually, but they
premium.
get passed on naman through some in the way their cost structure and their revenue structure.
Okay.
So right now, yung deposit insurance fund, it stands 54.3 billion. Ang binigay lang ng what the government.
I'm sorry, could you repeat that?
It's called the DIF.
Okay.
The pinupool nila yan.
The deposit insurance fund.
That's right. Net of the claims.
Right.
So it's already about 54.3 billion. 3 billion lang yung the contribution of the national government. And
so is that where the 10 billion that you're proposing to go into PDIC?
That's right.
Specifically just for the insurance?
No, more for the equity. Because
so it's for recapitalization?
Not recap. They already have a strong capital, but I want to have it that capacity, so to keep the depositor at the same time, so they could finance yung increase from 250 to 500,000.
Okay. The other thing that you mentioned in that you were looking at is the 40 billion into the
BSP.
Is that in addition to what they're supposed to, or is this
this
is the pay up that the balance that needs to be paid up?
That is a good time to pay it up. Yeah. All they have to do is to give them treasury bills. So it doesn't make an impact on your deficit.
Yeah, so they just basically
new debt lang.
Into BSP directly.
That's right. You give them treasury bills, and the impact on the GAA of the deficit is only the interest on the debt.
Okay, but I was just recently reading something, maybe it was from about a month ago.
Yeah.
A financial stability bond.
Yeah, it could be done that way. Yeah. In other words, against a national government obligation. At the end of the day, it's a national government obligation. But
so how are they going to basically how are they going to be injecting the 40 billion to the BSP? They should be finishing it by this year. Is that how it's supposed to happen?
Well, because if they have, the BSP can sell those treasury bills.
Yeah, right. But I mean to say, the 40 billion has been outstanding since 1992, right?
93.
93.
Yeah, so we need to inject new money.
Okay.
And generally, I think that will allow the BSP, because that's only the equity. But the equity will be used by BSP for its other economic activity.
Why taking so long to basically put this 40 billion?
Well, there are other priorities.
But this would be the most opportune time to...
But we injected 450 billion.
When was this?
When we recapitalized them in 1993.
93.
I think we've recovered about, 30 billion only of the 450, because they had liabilities but no assets.
Okay.
So what we did is essentially transfer the liabilities to equity. The contra account is the treasury bills we gave them.
Okay, but the 40 and the 10, where would the funding come from for this now?
Basically, I think we can issue new bonds. That's what the financial stability bonds, or basically give them treasury bills again. But we inject equity.
Including for the PDIC?
Both, I think, can be done.
Okay. The other thing that you had mentioned was to possibly look at regulatory oversight, or be a little bit more stricter. Could you elaborate on that? What exactly are you looking at here?
Well, generally, you have insurance products under Insurance Commission. You have securities products under SEC. But you would also have bank products under the Bangko Sentral. So, but given the financial engineering in the markets, so in fact, I think this has always been cited as one of the causes of the current financial meltdown because there were regulatory gaps which allowed the markets to come up with products beyond. They look like insurance when in fact it's behaving like a security. So they did not fall under the prudential limitations of the SEC.
But you're talking about what's happening in the U.S.
I think
but
it will be.
That?
We have to prevent that because there are regulatory gaps. You don't have to wait. You know, as they would say, financial markets are non-linear dynamical systems.
Okay.
When you say virtually, they usually grow faster than the regulations, and they will always find a way of circumventing regulations. They call it financial innovation. So essentially, in that kind of a situation, you really look at the structure. I mean, in order to treat the problems created by so-called...
But you're basically putting preemptive measures for something that still does not really quite exist here yet. Or does it?
We've seen it before.
Yeah.
We've seen it before.
No, but the products you're talking about, we're still pretty...
they're enough
not as developed as...
There are enough pyramiding schemes.
Oh, well, then that might be a case of enforcement then.
No, but the pyramiding schemes appeared as some form of securities. Sometimes behaving like a deposit. So I mean, well, in short, I think we just have to close those gaps.
Okay.
And generally, what we need really is a stronger financial supervision to prevent these things from happening. So, kasi there are three principles actually for these crisis countermeasures, which I call them. Number one, really, you have the real economy first. So you need economic stimulus. Second, you help the depositor rather than the banker.
Right.
And you preempt rather than react.
Okay.
So all these three, I think, together, essentially, I think, the guiding principles for the design of the structure of the crisis. And if you look at what I call the non-linear dynamical system, you look for the structure. So the structure really, you need structural change there.
Okay.
So that, I think, a unified, simplified financial services authority, I think, should address that issue. So there will be no gaps.
Right.
You cannot be
So this will be something that would oversee all, like the SEC, all three commissions, all three agencies.
So, and like the PPI, for example, in the UK, it was an insurance, but actually it behaved like a securities.
Yeah. Okay.
And they were selling it an insurance. Well, actually, it allowed you to make a loan against it,
right.
And therefore it behaved like a security.
Okay.
And usually in that kind of a system, you would probably need to look for the points of maximum leverage. In this kind of situation, you analyze it properly, and usually the points of maximum leverage are probably several steps removed from their actual consequences.
Okay.
If you study it very well at the heart and soul of the current problem, in short, if you want to touch anything, the buttons you should really push should be depositor confidence. That is central because if you look at the trends, for example, you look at Europe, the US, actually increasingly there is the only deposit. I think people are willing to lend to government, but not to the banks.
Banks aren't lending to banks.
They're not lending to, even in the Philippines.
Yeah.
Our interbank has come down from 250 to only 200 billion.
Okay, but structurally, our banking system here in the Philippines
pretty healthy.
Is compared to what's going on in the UK.
Well, if you're too late to the
US.
party, you usually will be less
off.
drunk. And in fact, I think I'm very skeptical about what the nation states are doing because it's not events that essentially shape our welfare, our national welfare. It is how nation states respond to events that will essentially shape it. So I think this thing is, we have a drunk global economy. So all these interest rate cuts will simply just allow them, will just prolong the hangover. I think at the end of the day,
so what? But
clean the garbage.
They seem to be running out of bullets. I mean, they just keep
You have
cutting
to clean
rates.
the garbage, cut your laws, face up to the music.
So let these banks fail.
Well, what will happen there is that increasingly you have a transitional states where essentially governments will behave like bankers.
Right.
And what happens that bankers essentially will be running industries at the rate they're going because they're failing. The real economy is failing across the world. At the end of the day, protracted periods of monetary hedonism wherein they created so much money, and that money went into certain activities which are essentially unproductive, including wars.
Okay, but this
So you're talking
this
about
is protracted since 1999. Since
more under Greenspan. You kept interest rate at one point. I was in fact amused when there was news about all these coordinated rate cuts because the rates are already very low.
Yeah, how much further can you
go?
go?
Precisely. We're talking about 2.75. The Philippines is what, 6.75? So, I mean, I don't know how far.
Okay, so how long do you think this will
I
take
hope the
to
central
basically clean itself up? And
it takes time. I think we will have a protracted period, and the real economy will, I think, certainly be affected. I think if you hear the news today, the one